Hello, and welcome to this week's edition of Inside Today's Boardrooms, your source for the latest and greatest in corporate governance, all in 10 minutes. I'm Lisa Edwards, Executive Chair of Diligent Institute and host of the show. Today, I'm joined by Stephen Parker, partner at PwC's Governance Insight Center. Stephen, thanks for joining us today.
Thanks for having me, Lisa. It's a pleasure.
Great. Well, so I understand you publish a paper each year that highlights the various topics for audit committees to think about. And, especially as one year draws to a close and a new year begins, we see all these, the best of, the best books of, the best photographs of, maybe tell us a little bit more about this paper that you produce.
Sure, Lisa, I'm happy to. And while our year-end paper gets a little more press, we actually issue a paper for audit committees every quarter. And for year-end, we issue it sometime in mid-December, and our focus areas are really those hot topics that we believe audit committees should be considering as they enter the year-end reporting and audit cycles, and are also preparing for proxy reporting. And in our paper, we try to be really efficient in describing the issues, why they're important to audit committees, and then give them example questions that members could consider asking management, external auditors, and others.
I love that because, the audit committee is a pretty busy committee. In that report, I think you outline three sort of major buckets of issues for those audit committees. So the first bucket that I think would be interesting for us to talk through are the things that the audit committee may have a challenging time overseeing. Can you break that one down a little bit for us?
I would be happy to. And these buckets, admittedly, are probably the way I would kind of group some of the items that we have in this report. Of the 8 or so topics we address in our report, I do put 3 of them in this category of matters that continue to challenge committees, albeit for different reasons. The first area would be around oversight of artificial intelligence, at least as it relates to financial reporting and oversight of both internal audit and external audit. We both know AI is not new, but generative AI is certainly more recent and involves significantly more complex risks and opportunities for companies. In our report, we describe kind of the why and how audit committees should be engaging with management, internal audit, and their external auditor. AI relies heavily on data, so quality, unbiased data is an imperative. And accordingly, we believe that human intervention and oversight are going to always be required. The second area of the bucket is a category in this category relates to the continuing challenges that our geopolitical and macroeconomic environments create for management as they continue to do things like evaluate liquidity and going concern matters. Again, the possibility of asset impairments as they prepare for enhanced disclosures in their 10Ks, possibly in likely the description of their business, risk factors, MD&A, critical accounting policies and estimates, and of course, even the footnotes. These challenges also complicate the preparation by management of their 2024 forecasts. And for audit committees, we suggest that they should be engaging with management to understand how these geopolitical and macroeconomic realities really create the opportunities and risks for the company, and to understand how the uncertainties from these factors impact management's estimates and assumptions. The final area here is one that continues to be a challenge for audit committees, and that's how the committee can continue to increase its efficiency and effectiveness. As you pointed out, the audit committee's agenda seems to continue to expand, and these oversight matters that are getting added are complex and they change at a rapid pace. So I think pausing to evaluate the committee's operations, including its agenda setting, timing of materials getting to audit committee members, the use of executive summaries to direct the members to significant matters for consideration, and then finally, the use of private and executive sessions is all time well spent. Additionally, the committee should assess whether it has the right competencies around the table to execute these oversight responsibilities, and whether certain risks may need to be reassigned to different board committees. Unfortunately, Lisa, there's not a silver bullet to solve this challenge that most audit committees face, but the combination of these tips, I hear seem to help.
Yeah, that's super consistent with some of the things that I've heard around, particularly AI, and emerging technology, and even cyber. There's aspects of that involve, signing off on disclosures that are going into the Ks, and they say we need to deal with this. So okay, so good cut. Lots going on, lots of things changing. The second two buckets are kind of related. They're around this idea of new standards and disclosure requirements. So give us a little bit of a heads up there. What do audit committees in particular need to be prepared for here?
So our paper's got the right level of detail for audit committee members to consider whether these matters might be relevant to their company. So I'm going to keep my comments at a little bit of a higher level. Certainly, the FASB's issued new guidance related to segment reporting and the accounting for disclosure of crypto assets. And they also have several proposals out there for consideration, including one related to the disaggregation of income statement expenses in the footnotes, and then also their income tax disclosure project, which involves significantly greater disclosure of taxes paid by jurisdiction. Further on items impacting taxes, you got the Inflation Reduction Act provisions, you have OECD's Pillar 2 provisions, and both of these can create significant opportunities and challenges for companies. So it's important for the committee to know how management is thinking through how these rules may impact financial reporting and even strategy. Additionally, I'd be remiss if I didn't note that preparing for some of these regulations may involve challenges related to having the right amount of staff and even technology to collect the data that may be needed to comply with these new disclosure requirements. Of course, we can't forget sustainability reporting rules, which have been passed in the EU and in California. While the SEC hasn't issued its climate rule, yet most believe certainly it's imminent. And when it comes to climate and other sustainability disclosures, human capital and the like, the real question is going to relate to the design and operation of internal controls and processes to generate these reliable, accurate, and complete data for reporting. And we all know that ensuring implementation of such controls and processes to produce this investor grade data will take some time to fully implement. Lastly, in this area will be the oversight of third-party assurance. And I think most believe that this responsibility is going to rest with the audit committee, given its core competency in this area. Finally, in the areas of disclosures, companies are going to be required to disclose for the first time in this next 10K, both management's process for assessing, monitoring, and mitigating cybersecurity, but they'll also have to disclose how the board is executing oversight of cybersecurity risk. And what I hear from directors, and makes sense to me, that preparing these disclosures to reflect the company's and the board's actual processes is likely going to be an iterative process. So it's a good idea to get the audit committee involved early in the review of these disclosures. Additionally, SEC comment letters can give management insight into where the SEC may be focused. So while non-GAAP measures and MD&A, they continue to be two of the top topic areas for the SEC, our paper provides a little insight into what specifically the SEC is digging deep on. And so I think encouraging the audit committee to talk to management about their perspective of some of these SEC comment trends, if you will, is an important thing to get out in front of. And lastly, we discussed the importance of incorporating transparent disclosure in the annual proxy to really tell the story of how the board and the committees are exercising risk oversight, among other things. In particular, with respect to audit committees, we see trends for greater transparency in the audit committee report related to exactly how members are overseeing the external auditor, including disclosures of the actual considerations they make in that process, not just simply that they exercise that oversight.
Yeah, that's super interesting. And I would say I get so many questions. You brought up climate, and Obviously, the SEC, we've all been sort of waiting with bated breath on, what are they going to say about that? But in any case, a lot of boards are saying there's extraterritorial, aspects to both the European legislation and to California. So, at some point you have to comply with it anyway. And so there you go. And just lots of, I wouldn't call it anxiety, but lots of prepping around some of those things. So I think that's a really good call out. So maybe, wrap it up for us with just what is your, given all of these things and given the just sheer quantity of the stuff that you ticked through, besides like the great advice to go read the report in depth and really sort of absorb it and understand it, what's your advice to audit committee members as we head into 2024?
So, we've talked about a lot. There's a lot to digest. It's certainly all in the paper. But Lisa, as I reflect on this question, I'm going to suggest two things heading into 2024. And I hear both of these often from other audit committee members. So I don't think it's too far off. But first, encourage committee members to make a renewed commitment to continuing education, whether it occurs during the course of the meetings or outside the boardroom. I hear more and more how important it is. And you think about some of these things we just talked about, they're complex. And it's really important for committee members to stay up to speed on the nuances of some of how these risks are evolving. And secondly, is just remembering the importance of open communication with management and the other groups that report into the committee, and making that investment of time and building those trusted relationships, which will further the understanding by all of the parties of the expectations and ultimately drive better performance for the audit committee.
I love that. And I bet you and the PwC auditors get called in quite a bit to do some education on the latest trends and things that are going on. So I'm sure your customers appreciate that. Well, that is all the time that we have for today. Thank you, Stephen, for your insights on this really fascinating topic and really timely at the end of the year. To our listeners, if you'd like to check out the full paper and the rest of the resources, go to the PwC Governance Insight Center. And thank you, Stephen, for being with us.